And we have TCS earnings which came out last evening, and we have now joining us Sandip Agarwal, fund manager, Sowilo Investment. Sandeep, hi. How do you look at the TCS numbers? The management seems to be a little confident with respect to the kind of demand that they're seeing. The TCV growth has been one of the best in many years.
Yeah, hi, good morning, and thanks for having me on your channel. So, yes, I think the most important thing is that people were expecting a sharp, decline in the TCV because of the AI impact, but the TCV at 12 billion is robust, I would say, at least steady compared to last 2 years. So I think from that perspective, the confidence is coming. And generally, in IT, it is a quarter-on-quarter building business model. So, fourth quarter, if you exit at $12 billion, it is a strong end to the quarter. Additionally, the net headcount addition of 2,000 people is also a great number. I think, while I will not comment on any specific company because we run a CMS, but let me put it this way, I think AI whole IT service sector will dull because impact will be more staggered over 4 or 5 years and will be 2-3% deflationary annually. So you will see still growth of 5-6% in large cap in dollar terms, and then when you convert it to rupee terms, I think next 2 years average 16-17% earnings CAGR is what I am expecting. So if that happens, then the stocks will have to re-rate at least 25% from here. That is what my sense is.
Sandeep, the way the TCS management has spoken about how they're using AI for many of their clients, how the new clients are, migrating to the new platforms which are there. Do you think that the IT companies have that enterprise level expertise to combine AI with their enterprise level capabilities and then offer this to the clients?
See, the thing you have to remember is that, what IT services companies do is they are basically an integrator, right? So there are companies which will provide you on that, and then you have to, service the client based on that. So see, I would say that you should see AI as same as when you make hardware, right? You make GPUs, you make servers, you make any other hardware or software products, and then someone has to come integrate and make it usable and deliver outcomes. So I think that role is not going anywhere. What is happening is that some of the savings which you were doing earlier, you were able to retain them with yourself because of time and because of fixed price contract. Some of those benefits now have come open in the light, and you will have to pass on those benefits because of the AI impact.
And Sandeep, what do you make of the current quarter margins? I'll talk a little bit forward, but just the current quarter, how do you assess the kind of margins that TCS has delivered?
So see, every time when currency moves, people expect immediate benefit of the currency depreciation on the margins and all. I think that is not the right way, because you remember that when we always commit in advance how much money we will invest in our new initiatives, and secondly, all these margin benefits which flow because of depreciation of rupee and all, it takes time to go down to the bottom line. The way to look at it is that, structurally, I think the currency will not stabilize where it was last year in future. And every 1% depreciation in rupee for a large company like Infosys or TCS will give you 1% EPS accretion. So basically, if you see broadly 12-13% depreciation, from that in the earnings, and 5-6% annual revenue growth for large companies, I would say total 23-24%. And these companies now don't have any impact. Last 7-8 years when rupee depreciated, they did not improve margin, primarily because the wage hike impact was high, and also they were.
Okay, that's the analysis coming in on IT. And of course, shortly, we're going to be hearing Sajid's interaction with the top brass at TCS as well. Tell you what.